Good evening. Hope everyone's had a good weekend and enjoyed the Super Bowl. Congrats to the Philadelphia Eagles beating the Kansas City Chiefs. Spoiler alert. All right, it's time to get down and dirty, so to speak, with a look into the week ahead for the stock market. We can see that the key focus this week is definitely going to be inflation data on Wednesday and Thursday, as well as some commentary from Mr. Powell. It's going to get a little interesting because we are set to see that inflation should have risen to 0.3%, but the prior reading was 0.4%, so a slight downtick. So we definitely want to pay attention to that. We're also paying attention to core CPI, which is likely to have risen to 0.3% also in January after increasing 0.2% in the prior month. Like I said, on Thursday, we get a report on the PPI for final demand, which is set to likely have risen to 0.3% in January, following a 0.2% increase in the previous month. Now, annually, the index has risen 3.2% in January. PPI, excluding food and energy components, probably rose about 0.3% last month. And we also, on Wednesday, get our weekly jobless claims report on Thursday as well. The initial claims for the unemployment benefits probably fell about 3,000 to about 216,000 for the week ending in February 8th. And then on Friday, we also get our Census Bureau data to show that retail sales are set to have declined to 0.0%. I've also seen numbers 0.1% in January, after recording a 0.4% increase in December, how we closed out the holiday shopping. So we are expected to see a little bit of a decrease on that. And yeah, like I touched base earlier, we also have Federal Chairman Powell, and as well as a few other policymakers that are scheduled to attend various events throughout the week. Powell is set to deliver his semi-annual monetary policy testimony before the House Financial Services Committee in Washington. And at the same day, we also have the Atlanta Fed President Bostic, who is set to speak on the economic outlook in a moderated conversation before the Atlanta chapter of the National Association of Corporate Directors in Atlanta. And you got John Williams on Tuesday, Beth Hammock to speak at the University of Kentucky. So yeah, there's a lot of interesting stuff at play this week, but most importantly is definitely going to be the inflation readings and the commentary from Jerome Powell. That will be he'll have a set speech written out, and then he will also be taking questions from the panel, and this can kind of drag on as well. Before the bell rang, I guess I could bring this back up. Let's see, we can bring up, this is the NQ 30-minute. We can see right here that markets did take a little bit of a dip during the overnight session before, the Super Bowl. Trump made some commentary that he is proposing a 25% tariffs on all steel and aluminum. And he also told reporters that he's going to announce these new tariffs tomorrow on Monday, and that he's also going to announce reciprocal tariffs on Tuesday or Wednesday on countries that have imposed tariffs on U.S.-made goods. Simply put, he said that if they charge us, we will charge them. Vice versa. The tariff situation is a very fluid situation. As of Friday, 146 companies out of the S&P 500 have mentioned the term tariff or tariffs in their earnings calls so far between December 15th and February 6th. And those companies are trying to anticipate the potential impact of those tariffs on their business. And this is the highest number since the second quarter of 2019, since, tariffs have become such a big issue on companies. So that is something that we want to be paying attention to. Like I said, it's a continuous fluid situation. Anytime that Trump speaks, we need to be kind of dialed in, because this market reacts pretty crazily when he comes on board, or when the press secretary comes out and does Q&A with the press. So lots of stuff to kind of pay attention to. A lot of volatility in play, no doubt about that. But yeah, we're going to keep our eye on the inflation data, as well as Fed Chairman Powell. Now, we do have a slew of earnings, mainly for retail. There are some interesting ones. We got McDonald's tomorrow before the opening. We got Coca-Cola. You got some really good, strong names that have been playing out, such as Robinhood and Reddit. We have Coinbase on Thursday coming up. Airbnb, Moderna is also set to schedule its fourth quarter results on Friday, and investors are going to be looking for additional comments around plans to reduce spending and counter slow adoption of its respiratory virus vaccine that's been, in the news a lot lately. So lots of interesting stuff just to kind of be paying attention to. But retail is also going to be a key thing, and we also want to pay attention to yields, which have which rose on Friday in the wake of the mixed jobs report and weak consumer sentiment data. And we saw a strengthening of the dollar on Friday, and we can pull up the charts now here on Friday, where, we had that nice little dip on Sunday, which was bought up pretty much all week long, Monday, Tuesday, Wednesday, Thursday. And then Friday is when we had that nasty little turn of events off that mixed data and trade war jitters. And as you can see here, the SPY is just pretty much wrestling with the 611 mark and the 589 zone. So this is where I'm paying attention to. We're just kind of in this box for the time being. But if we turn our attention to the 30-minute chart here on the left-hand side, you can see that things aren't so nice just yet. We can see there, here's our high at 610.78 on the SPY. Here's a lower high, and here is another lower high that was printed on Friday at 607.50. As you can see, these two moves that we've had in the past 2 weeks are very similar. What I am curious to see is if we got the overnight dip, and is this going to be just another opportunity for bulls to rip higher, maybe have a break of structure here, and then we can go into all-time highs? Or is this simply just going to be a continuation of the pattern where we have this lower high confirmed, and we print in a new lower low, and we break this 589.20, wherein there is a gap to fill towards 586. We can see here on the 30-minute that there is a mid-bear score with a score of minus 32. Momentum is kind of out of whack here. The oscillator is in a bearish positioning, and thrust has yet to turn back to the upside for the market bulls. So definitely a lot of things to kind of consider here. But SPY, we're in a overall neutral position on the daily with a score of 14. This is neutral bull because the oscillator is above the 50 line, and thrust is weak here. So not a whole lot of momentum, especially after Friday. That was kind of killed off based on that mixed data. And like I said, we're just stuck in this 610.78 and 589.20 zone. If we start to break 589.20, yeah, we could spill on down, get that gap fill, and go from there. Let's turn our attention to the NASDAQ here, the QQQ ETF. A little bit of a different story, but again, we had that gap down last Sunday night, and we pretty much recovered the entire move, plus some. We didn't quite take out 533.82, so that's going to be my overall zone here for the NASDAQ. We really need to get above this level for us to push into new all-time highs at 539.15. but we also haven't really broken down or closed below the 511.5 mark. So eventually someone's going to have to blink. We're still in a nice little daily squeeze here, and it's just a matter of who's going to come out on top, especially with the tariffs. And we're still trying to digest a lot of these earnings moves. We saw Amazon sell off on their earnings. Apple has also been hit pretty hard recently. It did have a nice comeback to the daily 50, but you got a good hard rejection off of that. Are we going to get some follow through here and get ourselves a revisit to the daily 200, which would also get us a retest of this 220.69 level, which has been important to us the last time we came down and retested here, where we had the breakout, we defended, and we defended 2, 3, 4, 5, 6 times off that 220, 221 zone, rocketed up, and now are we going to see another test of that 220.69 level and shoot back up? So I am definitely going to be paying attention to Apple this week, no doubt about it. We also had a little bit of a sell-off from Google as well. We had a deep sell-off off of their earnings report, and as you can see, we're still in a little bit of a neutral positioning now that we've lost the 21 and the 50. We had a daily close below it. Are we going to come down and revisit the daily 200 like Apple and then kind of go from there? Or are we just going to continue to linger around this 191.75 mark, which is the prior all-time high breakout, which is way back here? So that's just another name that I am paying attention to. Semiconductors, they've been relatively quiet. We had that nice little breakout, not once, but twice. Mainly based with, NVIDIA, and then we had that deep gap down, and, we recovered. And, semiconductors have just not been, in the same program as everybody else. I know NVIDIA has had this deep pullback to the daily 200 off of the latest tariffs and all that kind of good stuff. But we had a strong week last week on NVIDIA, reclaiming the 200 simple moving average. Now we're just bonking our head on the daily 50. Now the question is, can we come back and get back above 130? If we can hold a close above 130, then yeah, I think NVIDIA can have a nice little push on ahead towards possibly even 140 and even fill this gap to about 143. So 130 is definitely going to be a crucial spot for me in the next coming days, or actually this week, really. So we'll definitely keep an eye on that. There's still a lot of strong names. Like I said, Hood has earnings this week. This has been a huge, powerful move as far as a lot of names out there. Hood continues to be a very strong leader out there. We got retail strength in Walmart, but we got some retail sales data coming up, so we definitely want to pay attention to. Software names such as Cloudflare, ticker NET, has been very strong on Friday with their earnings. So that's another element that I want to pay attention to. Gold itself, let's pull that out. Gold continues to push into all-time highs here, reaching 29.10 on Friday. Still very strong as far as that goes. But, we'll see if we can get a little bit of a breather on yields. I thought I had a daily chart pulled up, but that's okay. We can just do this here. Here we go. This is our 10-year yield. There we go. 10-year yields continue to sit at about 4.5% off the highs of about 4.8. It looked like, this was a little bit of a scary situation that if we broke above 4.8, we could have easily seen 5%, but they definitely mellowed out these past 2 weeks. Dollar continues to be an interesting point of interest as far as the peripherals. Now, VIX has been fairly darn quiet. We had the gap up and then we faded along with the market, gap down and market went up, gap up, and then we faded. The VIX continues to be pretty well contained, but there has been spikes in volatility and then it just kind of dies out. So again, if you're a day trader, VIX is something that you want to pay attention to just all day. Something should be on your screens, no doubt about that. But yeah, moving into the week, gold continues to be pretty darn resilient. Definitely want to pay attention to that. You can do the GLD ETF here. This is Spider Gold ETF. Looks pretty strong to me. Buy the dip kind of situation. Hood looks like a buy the dip. Now, Meta, one of the most impressive Mega 7 names out there, high of 725. A little bit of a shooter candle. You can see these candles have started to get smaller. Are we going to finally get a pullback? If we do, buy the dip seems to be in play here on Meta unless something drastically changes, but for the time being I don't see it changing anytime soon. But financials in general continue to be very darn strong, if you ask me. You got names such as JP Morgan has finally hit our 280 target, 279 there, so that looks pretty darn good to me. By the dip, you also got names like Wells Fargo, that looks pretty good. Raymond James looks pretty nice as well, hit a high of about 174. Definitely want to keep an eye on Berkshire. Berkshire looked like it had a nice little breakout last week, but again on Friday we had a little bit of a sell-off, which brings me to the Dow, the Diamond ETF. We can see that the Dow came really close, hitting new lifetime highs at 451.55. The Dow is very heavily weighted on blue chip names and financials and industrials. And if we get a break above this 451.55, yeah, this could be our leadership in the making, and we could see some pretty interesting moves amongst blue chips. IBM is one of those names that has been very strong throughout the whole year pretty much. So definitely want to keep an eye on that. And yeah, there's a lot of crazy things happening this week, especially with CPI and Powell and Trump. So yeah, day trading, in my opinion, is still probably your best friend. There are some swing trading opportunities, no doubt about that, especially with the low VIX. So we'll see if things can turn around for the bulls and we can break out of this pattern here of slightly lower highs and slightly lower lows. We could be channeling for a new breakout. That's definitely the thing that I'm watching. And if we do get that breakout, I'm still have an overhead target of about $625.60. So that's going to be my take for the week ahead. We'll keep it nice and simple here. Yeah, there's still a lot of good stuff out there. Baba, Hood, Meta, Net, Starbucks was another one that looks very strong. You got names like Snowflake, which actually came up to a resistance zone here at 191, and we seem to be rejecting. If we get above this, then this looks like pretty good. Let's zoom out to at least a year. Let's pull that up. Yeah, there's a gap above here that Snow can take advantage of if we can get to that. So I definitely want to pay attention to Snow. I believe Lulu, same situation. 418.70 continues to be our resistance level on Lulu. If we get a break above that, there's a nice little gap to fill up ahead. But all right, let's let things open up. Tomorrow's the fresh week, and we got inflation data to pay attention to as investors worry that Donald Trump's tariffs plans could be endangering Wall Street's hope for interest rate cuts this year. Or is it? So we'll see. All right, guys, y'all have a good evening. I will see you all in the trading floor on tomorrow morning, and we will get it going. All right, guys, take care. Have a good evening. Bye-bye.